Hello, today we are solving May 2025 IAL Unit 2. Green Sea Gas PLC is a company that is to start supplying gas to the western area of the country in August 2025. It buys gas supplies from a producer of North Sea gas. The budgets for August 2025 have already been prepared. The company is now going to prepare budgets for the September to December 2025. The following information is available given. Now here we can see that this is the information that has been given. The first part of part A question is to prepare the revenue budget for Green Sea Gas PLC. So prepare the revenue budget. So let's start filling in this table. First one is the weekly usage per customer. So here it has been directly given. So let's just write 400 units is the weekly usage in September. Then in October it is 500 units. And in November it is 625 units. And in December it is 750 units. Then we have to calculate monthly usage per customer. So here the information is given. There are 4 weeks in the month. So you had to multiply the weekly usage times the 4. So 400 units times the 4, it will give the monthly usage per customer. So for September it is 400 units, okay, times the 4. Which is 1600 units. Now we can calculate this for October as well. So 400 units, 500 units times the 4. So that is equal to 2000 units. Then let's calculate weekly usage for November. It is 625 units times the 4, which is equal to 2500 units. Then the monthly usage for December, it is going to be equal to 750 units times the 4. So that is equal to 3000 units. Now let's write in the table all the calculated values. 1600 units, 2000 units, then 2500 units, and 3000 units. Now price per unit, okay, what is the gas price per unit paid? It was 0.07 per unit. It was the same for all the months. So we will just fill in this 0.07 pounds. Then what will be the monthly usage charge per customer? So monthly usage charge per customer we have to calculate. So for the monthly usage per customer, you can write a formula like weekly usage per customer into 4 weeks, okay. 1 week usage times the 4. Then monthly usage charge per customer, that is going to be equal to monthly usage per customer into the price per unit. How much of units are they going to use in the month times the rate at which they are going to pay per unit. So if they are going to use 1600 units and per unit the charge is 0.07, it is 1600 units times the rate. So for September, let's calculate this. So that is going to be equal to 1600 units times 0.07. So that is going to be equal to 112 pounds. Now let's calculate the monthly usage charge for the month of October. 2000 units times 0.07, that is going to be equal to 140 pounds. Now monthly usage charge for the November, it is 2500 units times 0.07, that is going to be equal to 175 pounds. Then monthly usage charge for paid in December is 3000 units into 0.07, that is going to be equal to 210 pounds. Now let's fill up in the table. So for September it is 112 pounds, then it increased to 140 pounds. Then in the month of November they paid 175 pounds. And in the month of December you will pay 210 pounds. Now daily fixed charge per customer. Here the information is given here. Each customer must pay a fixed charge of 22 pence per day for the use of company's pipeline and equipment. So it will be the same for every month. So it is 0.22 pounds every month is the fixed charge for the pipeline and equipment. So let's fill it up in the table. Now let's calculate what will be the monthly fixed charge. If the daily fixed charge is 0.22 and if there are 28 days in the month, it is given here, okay, in the information. So we will calculate daily fixed charge per customer into 28, okay, into 28. So for September it will be 0.22 times 28, 6.16 pound. Now let's calculate for the month of October. 0.16, as we can see it's the same for all the months. It's 6.16 pounds is the fixed charge per customer. So let's fill up the fixed charge for every month that needs to be paid. Now let's calculate what is the monthly total charge. The monthly total charge per customer is going to be equal to monthly fixed charge per customer and the monthly usage charge. This is a variable charge, okay. So monthly usage charge, which is a variable charge, and the monthly fixed charge per customer. So if we add up these two, we will get the total monthly charge that was paid by the customer. So let's calculate for each month. For the September, it is going to be equal to 112 pound plus 6.16 pound will be total usage charge per customer plus the total monthly charge. So let's add up 112 plus 6.16, so pounds, that is equal to 118.16 pound. Now let's calculate, okay, the total monthly charge for the October. It is 140 plus 6 0.16 pound, that is 146.16 pound. Then for the month of November, 175 plus 6.16 pound, that is going to be equal to 181.16 pound. And for the month of December, it is 210 plus 6.16, that is going to be 216.16 pounds. Now let's write number of customers, okay, who are using this. So in the month of September, it is 285,000 customers, and it is the same number of customers in October, so it is 285,000 customers. And for the month of November, it increases by 10,000, so it is 295,000 customers. And for the month of December, it is 305,000 customers. Now let's calculate the revenue. Revenue is going to be equal to monthly total charge levied on a customer and the total number of customers. Okay, so the monthly, so quantity is the number of customers, and the total monthly charge that is paid, okay, is taken into consideration. So there are 285,000 customers in the month of September, and the total monthly charge paid is 118.16 per customer. So 285,000 customers are going to pay 285,000 into 118.16, that is 33,675,600. For the month of October, it is 285,000 into 146.16, that is 41655,600. So this much pounds is got as a revenue. Then for the month of November, it is 295,000 into 181.16, that is 53,442,200. So somewhere around 53.4 million. Then for the month of December, it is 305,000 customers, each paying 216.6. So the total is up to 659,288,800. Okay, so 659,288,800. So this is the revenue. Okay, you will prepare the revenue budget.